There's a bull market somewhere. This is a popular Wall Street adage that is absolutely true but isn't fully embraced. What's it mean? And how can you use it to make money? First, let's back up and offer a little background. Over time, 80 to 85% of stocks underperform the market. Let that sink in for a minute. 80 to 85% of stocks underperform. At first glance, this doesn't seem to make sense. You'd think some stocks would do well and others would do poorly, and the market would be the average right in the middle. But this isn't the case, because for every Netflix, and Netflix rallied 1,800% from its 2011 bottom to its 2015 top, there are 20 or 30 stocks that underperform. For every Tesla, for every Google, for every Amazon, for every Facebook, for every Priceline, there are 10 or 20 or 30 stocks that underperform. And for every stock that does well but doesn't knock the ball out of the ballpark, there are still 2 or 3 or 4 stocks that underperform. Let's say this is the distribution of gains and losses for each stock in the S&P 500. The average is about 12%, but as you can see, most stocks underperform, while a much smaller percentage outperforms, and an even smaller percentage outperforms by a large margin. This is typical. Over time, whatever the market does, most stocks will do worse. Only 15 to 20% will do better, and less than 10% will truly do great. This means the only way to beat the market is to be in some of the stocks that outperform by a wide margin. Mathematically, it's the only way. Money rotates around the market. Groups run hot and cold. At any given time, there will be a handful of groups doing extremely well, and almost everything else will be on par with the market or doing worse. And groups that are hot stay hot. We're not talking about day-to-day strength. We're not talking about news causing a group to perk up in the near term. We're talking about an underlying theme that persists for several months and often upwards of a year. The only way to outperform the market is to look beneath the surface and find the bull markets. It's to be in the best stocks at any given time. This is how it may play out over the course of a year. Let's say the S&P 500 rallies 12%, a pretty normal year. But beneath the surface, oil may run up 50% over the course of 6 months. And while this is taking place, semiconductors may rally 30% in 2 months. And as money rotates out of semis, it may rotate into trucking, which may run 20% in 6 weeks. And as money rotates out of trucking, it may move into financials, which then rallies 25% in 2 months. And the next group, and the next group. Beneath the surface, this takes place on an ongoing basis. There are many bull markets taking place that last anywhere from a couple weeks to several months. Trading and investing aren't easy, but they're made easier if you identify the bull markets and then drill down and find the stocks that are poised for big gains. Remember this graphic? Stocks don't sit in one place for long. They come into favor and fall out of favor. Stocks that have been dead money will come to life and lead the market for 6 months, and stocks that have been leading will take a break and trade on par with the overall market. You want to be focused with stocks that are on the far right side. Otherwise, your gains and losses will just cancel each other out. At levittbrothers.net, this is what we do with the Sector Breakdown and Trading Ideas report. We identify where money is flowing and discover the stocks poised for big gains. Since 2002, Leavitt Brothers has helped its subscribers outperform the market by being in the right stocks at any given time. Let us help you do the same.